Jesper Koll, head of equity research at JPMorgan Chase, joins us from our Tokyo bureau today. Jesper, we're in for a sell-off today if you judge it by the futures, whether they're trading in Chicago or in Singapore at this point. I mean, how do you look at the markets? It looks like a big reaction to those jobs numbers.
No, look, I mean, you're being mangled by macro right now in the sense of, fears over Hungary, and the spilling and more contagion from the European debt crisis, and that's clearly affecting indices globally. Meanwhile, here in Japan, the news is actually getting better in the sense of what matters. Earnings, the earnings stream, the earnings generated by corporate Japan continue to improve very, very nicely. And at the end of the day, I think that Japanese equities will very well end up being a big safe haven in global markets going forward.
For global markets, they haven't performed very well this year, but some say better than most other markets. But people are still looking at the sluggish economy here, Jesper.
It's interesting. People talk about sluggish economy. Japan is actually the best performing global industrial economy going forward. If you look at the acceleration in GDP growth, if you look at the acceleration in sales growth, I mean, it's all there. I come back to this point right now. Global markets, global risk market, global equity markets are being mangled by macro. Enormous amount of uncertainty, obviously, over what is going to happen to the future of Europe, as well as some uncertainty over the growth outlook in the People's Republic of China. That's what is affecting the asset classes overall. But you do see, when you actually splice the indices here in Japan, that domestic demand stocks have actually been outperforming quite nicely.
Okay, so Jesper, why don't you put a number to it? I mean, how much do you think the Nikkei 225 could gain this year and outperform the rest of the region?
Look, we reckon that earnings in Japan are going to be doubling. Now, that doesn't mean that the Nikkei is going to be doubling, but certainly, 15–18% upside is something between now and the end of the year that's perfectly possible if we're right, and the earnings stream of corporate Japan is going to surprise on the upside.
Okay, surprise on the upside. Let me just ask you, Jesper, about the political situation, because that's a bit of a dampener when you have a vacuum at the top. It seems like no one can hold the job for very long. I mean, 5 prime ministers in less than 4 years. But what do you think of Naoto Kan being the new PM?
Look, I think it's actually the opposite. I think that, we had a prime minister in Hatoyama who was focusing on social policies. That was a big flop. And now with Naoto Kan, you get a prime minister who is focusing on growth, who is focusing on economic and financial policy. It's very important, and people have lost out on all of this, that Japan now actually has a growth target. They do want to achieve 3% nominal GDP growth, 2% real growth. So there's actually a positive inflation target that is implied in these numbers. And very importantly, Kan Naoto, the new prime minister, is a great, great pragmatist. And then the other thing, in the political side itself, the big story was not Hatoyama bowing out, but the story that Ozawa, the backroom shogun, has now been ousted from position of power, and that actually increases the probability that we're going to get much more stable government here in Japan than people expect.
Jesper, but there's never a dull moment in Japanese politics, right? Because over the weekend, we have Ozawa coming up saying that he might stand against Naoto Kan in the next DPJ leadership race.
Oh, you're absolutely right. Look, I mean, there's never a dull moment. That's why, we look at Japanese politics and call it kabuki. But the whole point being, again, and this is really, I think, a key issue within the Democratic Party is that, yes, this focus on social policies that we had is now being superseded by a focus on economic growth policies. And, what exactly that's going to mean, we're going to have to wait and see over the next couple of years. Go ahead.
Yeah. We got to go, unfortunately, but thank you for joining us, Jesper Koll of JPMorgan.